But let's dig into the pushes and pulls in the oil market, because oil is actually lower despite these calls to ban certain sales from Russia. And it's largely, you would have thought it'd be higher because of China, because of a reopening story. What's going on? We've got the perfect guest, Rebecca Babin. I'm very pleased to say is here in the flesh, CIB Private Wealth Group Senior Equity Trader. Great to have some time with you, as always, Rebecca. And just talk to us about, oil suddenly took a little bit of a leg lower. What do you think's behind that all?
Yeah, so I think the move lower today is in reaction to the world's response to the China reopening. We saw Japan put travel restrictions on any entrance from China. Italy has made some headlines that's similar, and the U.S. is weighing precautions. So this is what's happening. We have the euphoria of a China reopen, which the crude market has been waiting for with bated breath for 6 to 9 months now, right? Every analyst has had this, we're going to reopen, it's going to swing demand by 1 million to 1.5 million barrels when it happens. However, how it happens has yet to be determined, and that's what the market fights every day. And right now, how it's happening is disorderly, and it could result in travel bans from other countries not wanting to let people with COVID, potentially new variants, into their countries, right? So it's not this linear, we're going to get 1 million barrels back on the market from a reopen. It's, wow, we might actually see a drop-off in demand initially, and then things pick back up. And I think the battle there today we're seeing is from those headlines around the U.S. weighing travel precautions and other countries doing the same.
But longer term, as you mentioned, this has to be a long-term bullish case for the demand side for crude. I just think about, again, this is a country that's been effectively shut down off and on for 3 years. I got to be net long this stuff going forward, don't I?
So that's a very consensus trade, and I'm glad you brought that up. So
yeah.
That is exactly.
Think outside the box.
Yep.
That is exactly what every analyst is saying. They're saying this is going to be huge, right? This is 1 million to 1.5 million barrels, and if you do back of the envelope math on what 1 million barrels of demand equates to in price, it's generally between $12 and $15, right? Okay. So it's a real number. It could really lift crude, and I do think most analysts are saying get long crude for the second half, right? Okay. When we've gone through these speed bumps of how the reopening takes place. So you're absolutely right. But against that, you also have to keep, in mind all the other risk factors we're up against. We have Russian supply, which has been very resilient. Analysts right now are already projecting those losses that Alexander Novak has announced. Analysts are projecting 500 to 1 million barrels of supply from Russia off the market in 2023. That's not a huge surprise. I think that's fairly well baked in. And then you have what's happening with the global economy and how that affects demand in the rest of the world. So it's not quite as straightforward as China's going to reopen, let's buy it, let's do it now. It's not going to be an easy trade. The last thing I'll say is, if you think about how badly people got burned, kind of in the beginning of 2022 when everybody was saying this is the trade, be long it, and we almost gave back all those gains in the early December, there's going to be, some scarring from that, and might take people longer to want to jump back in.
Talk to us about scarring in the market, dynamics in general, liquidity. What's it like out there at the moment?
It's super volatile. It's very illiquid. If you look at open interest is at 2014 lows for crude oil, right? So there is not a lot of market participation, and there is a massive amount of hesitancy to put money to work in something that's been this volatile. Even if you have the potential to make great returns, if the tail events are so extreme, do you look somewhere else to put that thesis to work? Do you put it in crude, or do you play that somewhere else?
Well, it just feels, why is liquidity low? We hear that not just in your market, but I hear it in the treasury market. I hear it everywhere. Is it simply because, the trading desk at Morgan Stanley is not picking up the phone?
I don't think it's that. I think the guys at Morgan Stanley probably want to take as many trades as they can, just like the rest of the street. I think it's an overall risk appetite. I think if you're looking at, and I'll go to Tina, right? If you didn't have an alternative, but now you can look at treasuries and there's more draws for your cash, you're going to look at other vehicles. And frankly, if you have this much uncertainty and you're coming out of a year where you don't feel like you have a lot of confidence in your calls, maybe you just take it a little slower and there's not as much money chasing trades.
How much are you thinking about the dollar amid all of this at the moment?
I try not to think about it. No, I mean, it's obviously a huge factor for commodities, and it's something you have to watch. I've been very surprised at the move that we've seen lower in the dollar has not buoyed crude at all. But on the upside, when the dollar was ripping, it totally was a factor for crude. So it's something I watch closely, and I know it's on the periphery of how crude will trade. However, I don't use it as like, okay, dollar weakness is going to be what makes this commodity go. Dollar weakness will help and support it, and it'll hurt it if it's ripping, but the fundamentals are going to be what drive it. I think China's a huge factor next year. I think how deep our slowdown in the U.S. is also a huge factor.
How about our good friends at OPEC Plus? How are they behaving these days? Is there going to be more supply coming on this market, or are they maybe taking it away?
So they've been quiet. Their last meeting, they said we're not meeting again until June, which is very interesting. But I think OPEC Plus is watching and going to be very strategic. My best guess is their next move is a cut. Everyone is anticipating
before the meeting in June.
Yes.
Okay.
I would assume that they come out and cut in January. If we see Chinese demand continue to falter here and these restrictions and crude testing maybe the low 70s, and they see some economic data that they don't think is going to help demand. I saw they made lower OSPs into China today. That's a huge thing. They're seeing softer demand. I think they're going to be preemptive and act. So I would expect them to be involved.